It's Friday, October 17th, 2025. Happy Friday to you. Tomorrow marks the beginning of the Diwali festive season, a time to light up our homes, fill our hearts with joy, and embrace new beginnings with warmth, laughter, and togetherness. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. Let's jump right in. The markets, Sensex and Nifty, both finished up about 1.0% each. That makes it a pretty strong two-day run. Feels like the Diwali vibe hit the street early.
It really does. And, it wasn't just sentiment driving it. There were solid reasons. We saw foreign investors selling ease off, which helped. But the main engines were, domestic optimism, good Q2 earnings coming in, and also this growing feeling about a possible U.S.-India trade truce.
That trade truce potential. Seems like that's providing a real psychological lift, maybe explaining that 1.0% jump. What's the market actually betting on there?
I think investors are hoping for, lower tariffs, easier access for some key Indian exports. That kind of speculation, it really acts as a tailwind, and you see that optimism feeding right into consumer stocks. Nifty FMCG, it led the pack, climbing a solid 2.0%.
Right, 2.0%, that feels significant. Is that basically the market betting on a big Diwali shopping season?
Exactly. It's a vote of confidence in household spending, basically. We also saw quite a bit of action in property. Nifty Realty and BSE Realty both gained 1.9%. Strong demand for assets there.
And looking at specific stocks, wow, food and staples really jumped. Nestle India soared 4.5%, Tata Consumer up 3.2%. Even banks look strong. Kotak Mahindra climbed, between 2.6% and 2.7%. Axis Bank up 2.3%.
Yeah, definite strength there. And this positive mood carried over to the IPO market, too. That's always a good indicator of risk appetite, right? Rubicon Research debuted with a premium close to 27.8%.
Wow, nearly 28% on day one.
And Canara Robeco AMC listed up about 5.4%. Those immediate pops, they just reinforce that investors are, willing to put money to work right now.
Okay, let's shift gears to the corporate results, especially IT. It seems like a real split decision between Infosys and Wipro. Bit of a tale of two companies there.
Definitely. Infosys put up strong Q2 numbers. That's July to September. They beat the street, net profit up 13% year on year. They even sounded confident enough to raise the lower end of their revenue guidance for the year. Financial services and manufacturing segments really pulled through for them.
But then Wipro, the story's quite different, isn't it? Their bottom line looks, a bit shaky.
It does. Wipro missed estimates. Net profit was up only slightly, 1.3% year on year, but actually fell 2.5% compared to the previous quarter.
Okay, so sequentially just means quarter-on-quarter decline.
Mm.
And that term, constant currency, in their guidance, what should we make of that?
Right, sequential decline means they lost a bit of steam from Q1 to Q2. And their guidance for this current quarter was pretty cautious, projecting growth between negative 0.5% and positive 1.5% in constant currency. Using constant currency, it kind of strips out exchange rate effects, so it tells you the underlying business outlook is genuinely soft. That one-off hit from a customer bankruptcy didn't help either, really highlighted some vulnerability.
And looking beyond IT, there's this other big theme emerging. High growth, but at what cost? Like Eternal, the Zomato blanket parent. Revenue tripled year on year, amazing growth, but net profit dropped 63%.
Yeah, that's the quick commerce gamble, isn't it? Grab market share now, figure out the costs later. That 63% profit drop is basically the bill coming due for that super aggressive expansion, especially Blinkit. Geo Financial, similar story. Revenue up 41% year over year, great, but net profit only edged up 0.9%. Why? Expenses shot up threefold.
Threefold. Wow, so investors have to ask, how long can you sustain that kind of revenue growth if costs just keep eating away profits?
Precisely. And even with staples, where the stocks flew, you saw the margin pressure. Nestle India, profit down 24% in Q2. That's despite revenue growing 11%. Higher input costs just squeeze them.
So connecting the dots, it really shows how tough inflation is making it to actually turn revenue into profit, even for big names.
Absolutely. Although, conversely, the lending space seems to be doing quite well, mostly because they're managing their loan books better. Indian Bank's profit rose a healthy 11.5%. But look at Indian Overseas Bank, IOB, a massive 58% jump in net profit.
58%, what drove that?
Primarily lower provision.
Lower provisions. So just to clarify for everyone, that means the bank is setting aside less money for potential bad loans, right? They feel more confident about borrowers repaying.
Exactly right. It's a strong signal of better asset quality, less perceived risk in their lending. Good sign for the system overall.
Okay, let's look at the macro picture now. Seems quite resilient. The rupee hit its highest point in a month. What caused that sudden strength?
It was a combination, really. Globally, the U.S. dollar weakened. There's more talk now that the Federal Reserve might cut interest rates sooner than people thought. When the Fed looks like easing, money tends to flow out of the dollar.
Okay, so weaker dollar globally.
Right. And domestically, well, there was some suspected intervention by the RBI the day before. That likely gave the rupee an extra push.
Got it. And maybe the most powerful domestic signal.
Hmm.
Inflation looks like it's really cooling down. Retail inflation at a 99-month low, 1.5% in September. Wholesale inflation also eased, down to 0.13%. What does this kind of cooling mean for the RBI?
It gives them breathing room. A lot of breathing room. Doesn't automatically mean rate cuts are coming tomorrow, but it definitely takes the pressure off them to hike rates further. They can now focus more on growth, managing the currency rather than just fighting inflation.
And that overall resilience, it's getting noticed internationally. S&P Global Ratings called India an investor's darling. They see the economy growing 6.5% this year, maybe hitting 7% over the next couple of years. That's a pretty strong endorsement, despite global headwinds.
It is. But, even darlings face geopolitical stuff. We saw that this week with India having to push back against President Trump's claim that PM Modi promised to stop buying Russian oil.
Right. What was the official line there? What's the key takeaway from that exchange?
India was very clear. No such high-level discussion happened. The Ministry of External Affairs stated pretty firmly that India buys energy based on what's best for its consumers, especially in volatile markets. It's about finding the most cost-effective source, period. And Russia kind of backed that up, saying their crude is still the cheapest option for India. Shows a focus on energy security over, let's say, external pressure.
Okay, switching back to global markets. U.S. economic data looked fairly positive for those hoping for Fed rate cuts. Jobless claims were described as quite decent by economists at J.P. Morgan and Goldman Sachs.
Yeah, quite decent, which basically feeds the narrative that maybe the U.S. economy is cooling just enough for the Fed to start thinking about cutting rates sooner rather than later.
And that economic outlook ties into a big issue for global talent, immigration policy. The U.S. Chamber of Commerce is suing the Trump administration over that proposed $100,000 annual fee for H-1B visas.
That's right. The chamber is calling it plainly unlawful, arguing it would really hurt businesses that depend on high-skilled workers. And we know something like 90% of H-1B holders are Indian professionals. It's a huge potential barrier.
$100,000 per visa per year? That's massive.
It really is. But on the other hand, there was actually a significant win for immigrant families this week. The U.S. Supreme Court decided not to hear a case challenging the H-4 EAD.
Okay, the H-4 EAD, that's the work permit for spouses of H-1B holders, correct? Huge deal for those families.
Exactly. Over 200,000 people rely on that. So the Supreme Court letting the existing rules stand provides really crucial stability and certainty for those families. It's kind of a counterbalance to those H-1B fee hike talks. Meanwhile, in tech globally, confidence seems high. TSMC, the big chip maker.
Taiwan Semiconductor.
Right. They raised their revenue growth forecast for 2025, again, second time this year. Seems the AI spending boom is real and maybe even stronger than expected. Demand for that hardware is just soaring.
All right, let's wrap up this deep dive with something from the world of pure science. Today's big innovation, quantum crystals for the next tech revolution.
Yeah, this is fascinating stuff. Scientists at Auburn University have designed new materials called surface immobilized electrodes. It's really cutting-edge material science, all about controlling something called free electrons.
Okay, we hear about electrons constantly, but what makes free electrons special here? And what's so new about these electrode materials?
Well, think of it like this. In most stuff, electrons are kind of locked into place around atoms. Free electrons are different. They can move around more easily within the material structure. This allows for amazing conductivity and some really unique quantum effects. The big deal with Auburn's work is stability. Getting materials with these useful free electrons to be stable and usable at normal conditions has been a massive challenge.
So they basically created a stable playground where they can precisely control quantum behavior within the material itself. What could that actually lead to?
Huge potential, really in two main areas. First, quantum computers. Stability and precise control are everything there. These crystals could be the foundation, the building blocks for future quantum processors. Second, chemical manufacturing. These materials could act as super efficient catalysts, driving chemical reactions using way less energy and producing less waste. It's a potential game changer for making things more efficiently and sustainably.
A foundational shift in how we engineer materials. Very cool. The great mix of science and market insights to end the week. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.